Hey, Pump Town and friends, welcome back. Oh my goodness, forgot to edit my label. NQ update. Hope you're all doing great. There we go. So, I hope you all had a great weekend. Happy Mother's Day to all the wonderful ladies out there. Thank you for all you do. We appreciate you and we love you. So, it looks like we got some fun coming up here. We got a nice compression candle for our previous week. We've got in the daily a shift in structure, and we've got a fair value gap also. So this fair value gap in the weekly time frame, I'm including this volume imbalance here. If you have it here, you might miss out on the midway point. So I would elect to use the low of that candle. So that'll be our weekly fair value gap. This is I really don't know what to call this, but it's a gap with an up close candle that we've closed above. So I'm looking for some sensitivity here when this week opens. Now, I am expecting when we open a gap to the upside. If that happens, I am really bullish, and I'm looking for the low at early on in the week, and for us to start trending really hard. When we're in an external range run, it's typically really mean and really one-sided. So one thing that I have not delineated here that you can have on your charts is this fair value gap here that we topped out at last week. Okay, I'm expecting us to snap through this one single clean pass this week. This here is in the daily time frame, and actually no, that's not. That's this gap here. Excuse me. So that's this inefficiency between this candle's close and this open here. This is what I'd be aiming for this week over here on this candle when it decides to open. And if we don't get that this week, then definitely next week to finish the job. Have this on your chart, weekly time frame, major buy side liquidity. This is what we've been aiming for since this candle's low here. And this guy here, we've got our order block. Like literally everything is so beautiful. If we were looking for something in like a 1 or 5 minute chart or 15-minute chart, it doesn't matter. Like this is where you'd be taking your liquidity pool and then running up for this here. So it's a weekly chart. So there's some range in here. So it's going to take a while to get up there, but this is hot. This is really hot. I am giga turbo bullish on every market out there, pretty much. So these are the levels that I'm going to be using. Now I'm going to take this off. Just because the major buy side liquidity pool resides at consequent encroachment of that gap. And you want to know the truth? I should be, by all technicalities, doing this because that's a gap too. And when you're including your fair value gap, you're supposed to be including that for your proper measurements. Now, the whole thing's a gap. Every candle has a gap in it. So like from that candle's body's low here to this candle's high here, the whole thing is a gap. So I'm just going to do away with not noise, but just a lot of things that could be confusing. Look, if I'm offside, I don't want to have a bunch of stuff on my chart that paints only a one-sided picture, because if it starts becoming apparent that it's not bullish, then I don't want that on my chart and have to be stuck to that idea. So I can't really explain it better than that, but this is what I'm going to be using moving forward. So I want to see either sensitivity here and our model, your model, whatever that is for you for a reversal. I want to see that down into here. If we could start breaking the midway point, obviously going to be aiming for here. Because the volatility index is so high still, we could see us gap open into major buy side, snap down Sunday, close the gap and this fair value gap, and then, maybe Tuesday, Wednesday, Thursday start running up. That's on the table, and this is the week that we're expecting a lot of fun. As far as I remember, we have Monday with no news driver. That's it. Correct me if I'm wrong. Could be Friday too. You guys go ahead and go check your roadmap Forex Factor. I'm going to leave that up to you. It's important for you to do it. And I'll be checking that out at midnight tonight. I just want to really see what goes on between the open and midnight. That's going to give me a lot of clues to, help the confidence in my analysis, which is looking really freaking sweet, man. This is so much fun. So let's drop into a daily chart and just take those levels and see what's going on. So, when you have a new day opening gap down here, this void liquidity, see how it's between Tuesday and Wednesday? Now, it's not that, and I know a lot of you are asking me about this, and you're probably wondering, well, what about that liquidity void down there? Ignore it. Yep. Ignore it for now. Price doesn't, because it's a daily gap and we're out of its respective range, we've basically made a brand new dealer's range. So yeah, it is kind of a discount, but I'll be real with you. It's out of our range. That's the higher low. That seems like a protected low to me. You got 1, 2, 3, 4 higher lows, 5 higher lows. Now that looks like a protected low to me. Even if price was to come and take that low, I wouldn't elect that it would want to take this one before running up. So when people don't know what they're doing with these gaps, they'll go, oh, well, we need to go down there. Every gap, no, it might get repriced too. It might save it for next freaking year for a bear market low, or, in its next cycle. It could save this specific daily gap forever, and it does not have to reprice to it at all. So when we're using it for the week, the rule is we carry it out throughout the rest of the week. That's Friday here. Have we left the range? Yes. You see this candle's low, this candle's high. We've now left the range here, Friday, closing above it. So it's not that we throw it in the garbage and it's done with. We're not paying attention to it right now. It's not important. It's not a new week opening gap. It's a day opening gap. They don't expire at the end of the week. But if you are left the range, then it just becomes something you keep on the shelf for later. So that being said, we are above some very beautiful support levels. And I say that with tongue in cheek, of course. Now, that weekly fair value gap is here. That's the high. And that's the low of the weekly fair value gap. And that resides inside of this breaker. So we could reprice there. And that looks like consequent encroachment to me. That actually looks really hot. So that's on the table. Now, that would mean that we're going to lose this candle. That would mean that we're going to lose consequent encroachment of our new week opening gap here. That's what I'm saying. If we start losing that, then I'll be just patiently waiting. And if I find a short into there, great. That's awesome. So we've got like this uptrend thingy here, but this bull flag kind of thing. So I would expect price to want to come and take the bull flag stop and then start ripping. With that in mind, I'll just drop into a 4-hour chart. And, it kind of did that already. So, this could be our support level for the week. If it trades up first, just don't let it trick you. Okay? Even if it does trade up, I'm still bullish. I know you'd be like, oh, well, usually if we trade up, we would closed the week bearish. Well, that's true sometimes, but not all the time. Because we could trade up first, hit these stops, then come down for these stops, then continue on up. And we see this all the time, and this is what I mean when you hear me say, I'm not concerned about what price does above the open. I'm concerned about what it does below the open, because it could do this shenanigan right here, which is, it's famous for this. So be prepared for that. Also, be prepared for price to just open. And look, if we open up and I kind of did this early because I want to be able to look really cool if we do, open a gap above, trade down, fill the gap, touch this gap, money printer on out of there. Okay, that's I would adore this. Just beyond. That would be the best case scenario, and that would give us our new week opening gap, vacuum block to the upside. So these are the levels that I deem salient to me with a bullish bias. It looks like in the weekly time frame it's going to break the downtrend here, and Ethereum already has, Bitcoin already has. Let's take a look at ES just for fun. No break in structure yet, but that's okay. It didn't like the daily and stuff like that, so it's cool. No biggie. If we lose this fair value gap, I'm just completely offside, and I'm just scalping ranges of the day. I'm just like intraday scalping. If I'm offside, price has to be in agreement with me for me to really want to put some risk up, and it's early. Like, no need to be forcing trades. We're gonna have some fun. It's projected to be fun coming up here for the next little bit, so don't feel like you have to force yourself. If you got no real clear stop hunt or no real clear model, just sit it out. Practice that. Practice sitting with the FOMO demon. Cuddle in the hammock and do your thing. All right, so this is the weekly chart. The external range run. This comes from the day here. Okay, so I'm including this, and there's 60 days here. So this is IPTA external range run here, and if it wants to get really bad at, if it wants to get really aggravated, I would say up in there is the goal. Obviously an inverted head and shoulder now materializing, so awesome. They're good in a discount market. So yeah, that's the daily chart. So the only level is this swing high from the daily chart. That's the only one I'm really interested in. Everything else is from the weekly chart. So it's this inefficiency here. I thought it was called an indigo gap. I was incorrect. It's a indigo entry technique in relation to an order block, so I was incorrect on that, but I was just cherry picking. I found something off, but I figured it out anyway. So this is just your run-of-the-mill inefficiency as far as I know. He might have another name for it, but he didn't release it, so we'll just call it inefficiency for now, and that's what I'm aiming for. Major buy side here, and maybe the bottom of the week here, perhaps here. And that's what I got, and I'm really excited to see what happens, you guys. This is fun. This is really fun. I'm like, if you put in the work, and especially through all of this garbly up here, if you put in the work, you're going to have a lot of fun. You weren't here for this, and this was actually here. I'm going to go to the all-time, because I'm going to show you. You weren't here for this. For that. No, this one here. This, and then this. It was so much fun. You could barely be wrong. Money coming everywhere. It came after this nasty dip here and this awesome, it's not a breaker, it's kind of a mitigation block, but with a unicorn. And in the monthly time frame, it was just The most beautiful order block in a discount you've ever seen in your life. Just a shy close above there with a compression candle, and then boom, compression, boom, 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 3 retarded soldiers. Comes down, hits the fair value gap here, and this breaker right here, look at that. And then it was up for a long time. And then throughout here, we were having quite a rough time. If you've been with me for a while, it was we did a decent job navigating it, but like lots of our runs were coming in Asia and London and being really lame in New York. If you put in the work here, you're gonna have so much fun, because this is coming. This right here, where it's just up and it's a lot of fun. You got to anticipate it. And you'd be like, oh, you're cooked, the economy, Trump sucks, blah, blah, blah. Look, think whatever you want. The charts are saying right now that this order block has held. And everybody who was long got stopped out. That was like trillions of dollars. Stop out. And it closed bullish. Like, if you can't see that, then I don't know what to tell you, because that's a double top, and that's where price is going. God bless you all. Thank you all for joining. Trade safe this week. Don't overdo it. Peace.